Okay, Assalamualaikum warahmatullahi wabarakatuh. Um, so we'll start the class with the recitation of Al-Fatiha. A'udzubillahiminasyaitonirrajim. Bismillahirrahmanirrahim. Alhamdulillahi rabbil alamin. Arrahmanir rahim. Maliki yaumiddin. Iyyaka nasta'in. Ihdinas siratal mustaqim. Siratal ladzina an'amta 'alaihim ghairil maghdubi 'alaihim waladdallin. Alhamdulillah. Uh, Praise to Allah Subhanahu wa Ta'ala. Okay, so we are here to continue on our lecture on the topic which is really interesting. Okay, really interesting because this is something that we investors, for example, or traders, or anybody fail to encounter when it's happened, right? So the market risk. So when we talk about market risk, it is affected the total market. It doesn't matter where are you in the stock market, or in the bond market, or in the unit trust market. Okay, so whenever it affect in market, everybody in the market, normally everybody will be affected. So today we'll be discussing about market risk, and we'll do a bit of the calculation. What will be the risk, okay, the potential losses if there is a market, we call it problems. Okay, so oops. Alright, so basically this is chapter 15 from the textbook. You can always refer to the textbook, right? Saunders. And when we talk about the market risk, okay, it is the earning uncertainty resulting from changes in the market prices. And recently we have some problem in the market. As mentioned before, okay, Donald Trump, right, the president of United States of America, has created some issues, okay, in terms of we call it a war trade. Okay, he purposely want to increase the tariff of steel, okay, by 20%, 25%, 20%, right, by 20%, and the tariff of aluminium or metal by 10%. So what happened is that the global market is has turned down, okay, has gone down by several points. Even the Dow Jones also has we call it plunged down by a certain 100 points, right? So the problem is that when this happens, your investment is having a little bit of problems, right? It will decrease in the values in the market price. So now I'm giving you one example. This is from the real, what we call it, what is happening in the market when Donald Trump announced that they want to increase the tariff by 20%. Okay, now let's see the Dow Jones. This is the 30 companies that are listed in the US. Okay, there are 30 companies, they call it the Dow Jones. Okay, so this represent the companies in the US. We have Dow Jones, okay, the Dow Jones. We have also the S&P 500. Okay, we have also Nasdaq. Okay, so let's look at Dow Jones. Where's the remote? This one. Okay. Right. So this is what happened, right? So you see here, when there is uncertainty, okay, the Dow Jones index has fallen down for about 2,000 points, okay, 2,000 points, so which is quite a big number. So it falls down until 23,000. Now it's actually going up again, but today it fell back by 200 points yesterday, okay, because Donald Trump says that he want to impose tariff for Chinese goods. Okay, he want to impose tariff for all Chinese goods. So basically, there you have a war trade. Okay, he wants to protect the U.S. economy or the U.S. industry. Okay, because the U.S. industries are actually, the price of the product from the U.S. is much more expensive as compared to from China, and he wants to impose a tariff, especially for semiconductor technology things, right? So because in the China, they produce it much more cheaper. So to make sure that the US product are competitive in terms of pricing, so you have to increase the tariff, okay, of this Chinese product. So then again, okay, you can see black crows are here. The black crows, we call it the three black crows. You see, can't see it. It is on, right? It is on. Oh, probably here. Okay, now it's on. Right, now you can see that there are three black crows here. 1, 2, 3. Okay, still waiting for the. Alright. Okay, so these are the three black crows. After he actually announced that he wants to impose additional tariff for the Chinese good, these are the tariff for metal and also steel. Okay, you can see that how the market has actually reacted to his policy. And this is Dow Jones. Now let's look at KLCI. Okay. So we also have the same problem right here. Okay. So our index went down, okay, at a very fast rate, right? From as high as 1,878 points to 1,795, which is quite low. And today also we are also having some. So basically, it's market is something that we cannot actually avoid, okay. But if you want to avoid, you have to be out from the market itself. So you are not actually participating. You are not a player, right? You are not working in the bank. So then only you can be out. But since we are in the market, then we have to face, okay. But how we want to face the market, then we need to know what would be the impact, okay, to our investment or our company or our bank if there is some, what we call it, market volatility, okay, if there are market volatility. It's already azan, yeah. Okay. Can we just continue on certain this slide, then we finish, right? Not finish. We adjourn for what you call it prayer. Um, it can be affected by other risks such as the interest rate risk that we have covered previous week, and also the foreign exchange risk. This is in 1997. Remember, we have the currency crisis in 1997. We have the currency crisis, and our economy was hit badly from the currency speculators. And also can be measured over periods as short as 1 day. Okay, the market sometimes affecting the the event actually affect the market in 1 day. For example, last time when the North Korean president, right, test a new nuclear missile, right, over the Japanese sea. So what happened to the market? It goes down. Our market goes down. Okay, because we are worried, panic, right? What will happen? World war, right? So all start to sell the stocks. Okay, when everybody want to sell the stock, panic selling, what happened? The stock market goes down. Okay, so it can be 1 day, but in the evening, people start buying back again. Right, so that's how actually sometimes panic selling and panic buying. Right, okay, you remember, oh, I'm just a panic selling, now I want to buy back. So they start panic buying. And then usually measured in terms of ringgit and dollar exposure amount, okay, or as a relative amount against some benchmark. So with that, we will continue on with the we call it lecture after the Asar prayer. So we start for about probably at 4:50, right? Because the now is actually a bit earlier, so we start at 4:50. Right. Thank you.